Well, this is an actual CEO, not a bra, but Carolyn Breeze runs the ASX-listed Scalare Partners. You have kind of gone from startup, but you work in a very interesting space in terms of being an advisory service to startups, investing in startups, and now being a public company. I want to start with, tell us about that experience last year, because everyone who's in startup land starts with an idea and they think about an exit. They want a cash moment, and we're going to talk about liquidity in a minute.
Yeah.
But that was a liquidity moment for you.
It was a really interesting process. I mean, for us it was less about a liquidity moment and more about another way to access capital to invest in really great tech. So we are not your typical VC fund in that we don't have a management fee, we don't charge a carry. So we write all those checks off our own balance sheet. So for us, being able to service the startup ecosystem with accelerators and events and programs is what gives us the profits to be able to invest in tech startups, and we also raise money from the market. So that's always been a key thing for us, is getting capital. Being a listed entity means that we just have another way, another set of investors. We've opened early stage tech investing up for retail investors, and they can now get access to early stage tech.
Now, the liquidity thing, I mean, there's the only other one I know of on the Australian market, of course, is Balador Technologies, which is David Kirk's company. They've had a good week. They had some uplift in some of their investments. But it's a hard space, and one of the things that's sending alarm bells through the sector, both on the startup side, looking for money, as well as those who are looking to invest, is the government's plan to tax superannuation funds for unrealised gains if they're worth more than $3 million.
Yeah.
One estimate I've heard is this could affect around 20% of the capital that goes to early stage companies, which is a pretty heavy sort of foot on the brake when you're trying to move quickly. What are you hearing as you talk to people about the government's plans?
Yeah, absolutely. And I think it could even be higher than 20%, because the tax is actually imposed on the value of the portfolio, whether it be self-managed or a super fund, anything over 3 million on unrealised gains, right? So people who have invested directly into startups, people who have invested into VC funds that then invest that money into startups, or even some of the high-risk PE firms, maybe sitting on portfolios where they could see, outsized gains, which is why we all invest, and then they'll have to pay tax on those unrealised gains, so no liquidity. So if you were a Canva early investor through your super fund and you had 50K out of your $300,000 super fund invested, and now you're seeing a $10 million unrealised gain in your super fund, you're going to have to pay 30% tax on everything over $3 million. Where are you going to get that money from? You can't sell your Canva shares. What are you going to do?
Yeah, you can, but it's really, really difficult. It's interesting because I wrote about it on Startup Daily this week, but Canva is looking at having a secondary share sale. This is where they're sold on the private market.
Yeah.
But unlike a public market, the founders, the people who control the company, will say, yes, you can or you can't sell.
Yep.
A lot of the employees are going to be caught up in this because the other thing that's happened here is Canva is now a US parent company. And in doing so, the ATO decided that for anyone who had shares while they worked in Australia for an Australian company,
They're vested.
Yeah. And suddenly they've got these US ones, so you've got this capital gain, and they want it. The way I think about this is it's like having a couple of chickens in your backyard, if you are that sort of person. And the ATO comes along and says, right, I would really like 24 eggs right now. And you're going, but I haven't laid them. The chickens haven't laid them yet.
That's right.
It's like, tough, I want the eggs.
Yeah, for me it feels like just another hit for Australian innovation and early stage tech companies. If you think back a year ago, we had all the talk around the sophisticated investor barriers.
Now looked at that, they backed down.
Yeah, they backed down. Now we've got this tax coming in for superannuation funds. It's becoming harder and harder to invest in Australian tech companies. Meanwhile, the government, on the other hand, it's like left brain, right brain, is saying, how do we invest more in the startup ecosystem? We know we need to be future jobs ready. We know we need to invest in innovation and MVP and startups. But on the other hand, we're going to tax anyone who's giving back to that community and helping those businesses thrive. And so I just feel like there's a huge mismatch.
And just explain to people who maybe invest on public markets how big and how important that private capital market is for the companies we're talking about.
It's so huge. We even someone like a Balador who is listed on the exchange, they're still a VC fund, right? And they have a place in the startup ecosystem. So that fund money is locked away for 10 years on average,
generally
right?
it's 10 years. Yeah.
That's the maturity. It's not like you can invest in Balador and then 3 years later go, oh, I'm going to buy a new house, I want my money out. It doesn't work like that. And so looking for liquid ways to invest in early stage startups is a great way to be able to do that. But but it's extremely rare. And so creating all these additional barriers and tax initiatives is just going to starve the innovation in the sector.
Because to go back to the Canva example, the other thing is there's been a lot of talk about them listing in the US on the NASDAQ. They're now talking about a valuation that is 57 billion Australian dollars, 37 US. This is for this private sale. The hope is that it will be worth even more. When you look at Atlassian, I think that was probably less than 10 bill when they listed, and that's a $100 billion company nowadays. So it gives you an idea of that incredible capacity in the US markets. But in this instance, everyone's thinking they might go onto the NASDAQ next year. It's starting to look like they won't. So it's going to be very interesting. And if you do want some liquidity, the only way you'll do it is by selling approved shares from the founders to approved buyers at an approved price.
That's really restrictive and really hard to do. And even before my time at Scolari, I worked in the startup ecosystem in startups, and I was an angel investor myself. And even for me as an active angel investor, that's something that I wouldn't even have known how to do. Right? When the government hit me with a tax bill, and that has happened to me, it kind of reminded me of a situation a few years ago when the government, realised and made simple the whole tax exemption piece around startups, right? So that they could attract great employees and not have them hit.
They're earlier stage VCs.
Exactly. Yeah. This feels like a huge step back from that. That was a really good move. It simplified that whole system and allowed people to work in the startup ecosystem. I got hit with a tax bill during that time, and I had to walk away from my shares. So I'd given 3 years of my career to a company, and the unrealised value I couldn't pay the tax on. I had to leave that there. And so what do you do in that circumstance? So it's really tough. I really hope that they reassess it and have a look at it. And I've even been thinking for people who don't even realise, I guess the risk portfolio within their self-managed super fund, or those that have taken those bets, if there was to be a big tax bill with an unrealised gain, how would the government even enforce that? You can't pay personal money to pay your super fund tax, right? So how would they even make that happen?
Talking to Canva today, they've said, look, no one will get caught by this. They're even prepared to lend to their staff and former staff, so that if you have to pay a tax bill, you can deal with it. But I know some of them are 7 figures, so we're talking $1 million or more. And that's part of your wages, and I kind of get that you get taxed on your wages, but generally the government doesn't tax you before you've been paid.
That's right.
We wait till that.
Actually, you raised a really good point right before we came on. So if we get hit with a tax bill for unrealised gains, and then in the 2 years that follow, the company value goes down, are they going to give us the money back?
Yeah, I've seen it happen with companies covering it on startupdaily.net, where 1 minute they're worth tens of millions of dollars, the next minute they go to zero. Now, hopefully I get to write that off somewhere down the track, but I can guarantee you the ATO won't come knocking saying, "Oops, that's unfortunate, here's your money back."
That's right.
In the time we've got left, I just want to briefly ask you about the Australian Technologies Competition, because this is basically your nursery for startups. Tell us a little bit about that.
It is. So it's in its 15th year this year. We had over 240 applications. So Australian companies looking to go global with less than 100 employees. We're down to 73 semi-finalists. We've had our masterclass, and they're going to work now with their mentors and re-pitch their business plan to us in September, and we'll have our awards night. It is a great way for us to find talent and to invest in the best of the best, and one of the many channels that we use to generate revenue for investment and also to get to know the best tech.
And it's also for them to go to the next level, to create international global companies from here in Australia, and access that capital along the way so that they can do that. And then everyone hopefully makes money and gets paid a little bit down the track.
Exactly. And this year we've actually got an investment prize from Scolari. It's the first year we've done this, which is $100,000 investing in that company's growth and success. So it's pretty exciting for the startup ecosystem.
And just to go back to something Henry talked about earlier, that Macquarie University spin out is that startup Apartheid. I've written about it today for working with the CBA. So the company's less than a year old. It's now working with the Commonwealth Bank. It's got partnerships with major telcos. It can deal with 10,000 scam calls a day.
Wow.
2,500 text messages a day, and this is all in less than a year. And I've had to listen to some of the conversations. They're amazing, and of course they're fighting fire with fire because the scammers are using AI, and so they're using AI to go back out against them. And it's great because I've done this. I'm the sort of strange mind that will sit there with a scammer and go, the internet? Do I have the internet in my house? What's the internet? And and eventually they give up and hang up on me.
Yeah.
But I love the idea that the fact that AI is doing this, but also gathering intelligence and then feeding it back into the Commonwealth Bank at real time.
Yeah.
That's the kind of innovation we're seeing here. It's the kind of incredible AI stuff that we're seeing here. You look at companies like Leonardo AI, which Canva bought for I think about $300 million. It was only a couple of years old. They built all of this incredible value in such a rapid rate of time. Canva now heading towards 60 billion, which, if you think about in Australian stock market terms, is one of the biggest companies in Australia, but in private hands.
That's right.
It's just an extraordinary story, and we've done it all from here.
Yeah, that's right. Even in the tech comp, I was at the masterclass day with 70, of the semi-finalists, and every company had an AI thread, whether they used it to automate and operationalise or whether it was at the core heart of their business. And it's just such an exciting time. Let's hope Leonardo wasn't in anyone's super fund.